Welcome, everybody. My name is Rohit Sethi. I'm the COO at Security Compass, and I'm going to be talking to you today about our Managing Application Security study. So a little bit on my background. I've been at Security Compass for 11 years, which is basically ancient by application security standards. I specialize in building security into software development lifecycles, and I've worked with a lot of the largest companies in the world on this. And have a background specifically focused on application software security. So I'm going to talk a little bit about the survey in general, and as I go through this, feel free to ask questions. Now, you won't be able to ask questions live in by speaking, but we do have a Q&A feature, as you'll see on the top of your screen. So we have I have a colleague here, Charmaine, who will be watching over the Q&A and can bring up questions as we go through. I'll do my best to answer them in time. Of course, at the end, we will also have another period where you can feel free to go ahead and ask questions. So some background on the survey before we dive in. We engaged to do this survey because we had been doing application security work for a number of years. And many of our clients would engage us to do secure SDLC. And they would say things like, help us to build a program or help us understand a gap analysis of where we are today and where we should go. And we would look at some of the best practice frameworks that were out there, and we prescribe this set of activities that the company should do. And time after time again, we would see that even if there were over 100 different activities that company ought to do to build secure software, they were often struggling to get just 3 or 4 done. So we wanted to get a sense of, well, what is making application security programs successful? What are the challenges people are facing? And what are the specific activities that are working at scale, not just in 1 or 2 applications, but for these companies that have hundreds or thousands of applications, how do you do it effectively, and what is working? So we sought out to do a study, and we'll talk a little bit more about some of the participants, not naming the participants, but just sort of a demographic breakdown. What you'll see here is the majority of participants, so 28 companies, 18 of which were $10 billion plus. So the sample size may not sound huge, but keep in mind when we're talking about $10 billion plus companies, this is a rather good sample. They come from a variety of industries, but the biggest sector that we talked to was the financial services industry. And if you've had a chance to read the report is specific to the financial services industry. But as I go through the slides here, I'll be talking about a broader industry-wide context. So let's talk about some of the key research findings. And one of the first things that I think we saw throughout the survey, not just in the questions that were answered directly, but in some of the color commentary that our participants gave us, is that there were 3 key trends that were driving application security and having an impact on it. The first is increasing speed of business. And this is particularly true for companies like financial services, where you traditionally had the ability to have sort of long projects and a lot of gating processes and a lot of risk management embedded in their standard operating processes, being challenged by younger, nimbler fintech companies that simply don't have the same degree of risk management. They're willing to take more risk. And in doing so, they're able to move faster. In software development, we see this manifest itself by way of agile development and DevOps. So people producing software quickly and releasing it quickly. And that is putting pressure on application security programs to make sure they're not slowing down the business. And that's a huge challenge, as we'll talk about, that affects a lot of the secure SDLC efforts. Another major challenge we saw, or rather I should say pressure we saw, is the increasing sophistication of risk management. So, most of you, no surprise, will know that there's a lot of pressure, even at the board of director level at large organizations, on cybersecurity overall, right? It's a new hot topic. There are committees and the boards of directors that are looking into this, and a lot of the large companies have sophisticated risk management groups that span overall risk management, operational risk, technology risk, and security risk as part of that. And so with this degree of sophistication in risk management, both in breadth of sophistication, but also depth of sophistication, there's more scrutiny on what's happening. And so that again is a driver or pressure for application security. And then the last is increasing pressure and cost control. And this is specifically the case for financial services firms, where there's as we talked about, more increasing competition from, not just smaller companies, but companies from different geographies that may have lower cost basis than, for example, a North American-based FI. And they have to be able to compete. So we need to make sure that we're keeping things under control from a cost perspective, that we are adequately addressing risk, and that we're not slowing down the business. And these are three trends that really touch on everything. So one of the key questions we asked is, what's driving your application security program, right? And interesting to see that what we had generally expected in previous years was that compliance was the key driver for a lot of information security programs, including application security. But this year, interestingly, when we asked this question, 79% of respondents stated that it's just general risk management, meaning, understanding that their applications may be under attack that's driving the spending on application security. So it's not just about doing what compliance mandates. Although that being said, the second biggest driver is compliance. So compliance mandates do have a major impact on application security. There's no doubt about it. However, a lot of companies are going above and beyond what is the compliance minimum. What we're starting to see increasingly is customer demand. Now, one thing that we noticed this year is that there's a sort of a difference between the companies that sell products that have software on them and those that use software for some other product. So you can imagine financial services, oil and gas, public sector, manufacturing, et cetera. They all sell something that software helps enable, whereas a independent software vendor or a embedded device vendor is actually selling a product with software in it. And those companies in particular, customer demand is driving interest in application security. Usually not the consumers, not the public, but institutional customers are often coming to them saying, we need to see how you're handling security throughout your software development process. You need to be able to show us evidence that you're doing so. Another interesting, facet is insurance companies that again sell primarily to, like benefits programs for corporations. Those corporations are starting to ask for sophisticated breakdown of how these companies are handling application security. So this is becoming an increasingly common driver, where it really wasn't in a lot of industries in years past. So, what do we take away from this? Well, one of the key things that we need to understand is that we need a systematic way of managing application security risk. And we'll go into a little bit more detail on this as we go through the presentation. But one of the key things to keep in mind is that what we'd like to see people do, and we'll have some evidence to sort of support this later, is move from simply validating controls, meaning applying some kind of testing process, to a more controls assessment view of the world. So what you see outside of application security, but just in general IT controls auditors, is to identify a control, implement the control, and then validate the control. And by doing this, you know exactly what it is you need to do, you implement it, and then you make sure that it's done. But the real situation in most companies today from an application security perspective is we don't identify controls, we don't implement the controls, we simply validate the controls by doing testing. And when I mean controls here, I'm talking specifically about something that you embed as a defensive measure inside of your code. So, related to how important is application security, or rather what's driving application security, is what is the importance? And when we asked this, 73% of the general population that we asked said it is either critical or always a top priority, or it's currently a high priority, right? And this is interesting to us. Now, keep in mind that the people we spoke to here, willingly talk to us about application security programs. So it's perhaps not indicative of the entire, general population, but even still, there's been no time in our past where we have seen this many people say that application security is a higher priority than other areas of information security. So clearly awareness is growing. And, if you if you look at the respondent population and you're say a multi-billion-dollar company, you're in the financial services world or in the oil and gas world or something, or in the software vendor world, and you don't identify as application security being a key priority, then you're really behind a lot of your peers in terms of prioritization. So this is something you want to keep in mind as you're thinking about where you're going to focus for your strategic priorities from a security perspective. So we then ask people to rate their support for application security on a scale of 1 to 5. And 1 meaning they have absolutely no support at all, 5 meaning they have support across the board. And you'll see here, again, an industry breakdown, this box plot chart. So the number that you see is the median. And the area, the shaded area, is the number between 25th and 75th percentile. Now, because we're on a scale of 1 to 5, sometimes the whiskers that you see at the end here are equivalent to the 25th percentile. And that might be sound a little confusing. The way to keep in mind is that the majority, of respondents are in the shaded box area, and the line in the middle is really the median. And so, here again, what we saw was that the support was a 3.5 on average for the energy utility sector, 3.5 for independent software vendors, and 4 out of 5 for finance. So, financial organizations are feeling a lot of support, whereas in some of the other industries, the support chain is quite wide. There's a gap where some companies are getting no support to push application security through, and others are getting support across the board. This, of course, is very critical for if you're going to roll out some kind of application security or secure SDLC program. If you are not supported from both the executive and top level as well as at the grassroots level, you're going to encounter resistance. And we call out some of the specific challenges people face within the actual text of the report. I believe we have one question. Oh, it's already answered. Okay. So moving on to the next here. There's a saying that what's measured matters. And one of the questions that we asked is, what are the metrics that you're using to gauge your application security program? And so interestingly, when we asked this, 75% of respondents were quite consistent. They said the number of vulnerabilities found. So we are tracking the application security program by knowing how many vulnerabilities we discovered through some testing process. Okay, and I'm going to talk a little bit more about that afterwards. The second most common response was compliance or adherence to company policy standards. So for example, if you say that every high risk application has to undergo a penetration test, are you making sure that they're doing that, right? That's compliance or adherence to company policy or standard. After that, the number of, or rather the consistency of metrics fell dramatically. So length of remediation, how long does it take to fix something? 39% of respondents were tracking. A number of development teams using tools, tool adoption, including training adoption, 32%. And as you kind of go down that list, you'll see fewer and fewer responses. What was interesting is that very few companies are doing anything around financial metrics of an application security program. And this may have something to do with the way that information security programs are typically structured. We're looking to find risks, not necessarily save money. So people aren't looking at things like how long does it cost us to, delay a production deadline due to a security fix. And that's interesting because what we have seen, and we've seen this from clients that we've worked with in the past, is where they've set up a program and they've put a lot of different initiatives in place. And there's a change in management, at some point. And somebody comes to ask the question, well, why are we spending this money on all these different programs? And if you can't quantify it, then your program is at risk. So this is really something to consider, is starting to put some effort into measuring the financial impact of your application security program. Now, I do want to make sure that we spend a little bit of time on this slide, because this is sort of the meat of what we came to assess, which is what are the specific activities that companies are doing to, at scale from an application security standpoint. So a lot of numbers on here, and let me just clarify, the key of what you're looking at. So the graph shows a variety of activities on a scale of 1 to 5. How broadly were those activities adopted. 1 means not at all. Okay, we don't do this activity at all today. 2 means we do this activity on a very small subset of, say, the most critical applications. 3 means a bigger subset, for example, all high-risk applications. 4 means the majority of applications, and 5 means all or nearly all applications. And what's interesting here is, there's some consistency in terms of the specific kind of activities that are scaling, but there is a delta between the different industries. So the numbers that you see here in orange are the industry averages. And then on the side, you'll see the columns for energy, utility, ISV, and finance. Now, I mentioned that we had 28 respondents. We had a small number in the energy, utility, and ISV. So, take it with a grain of salt when we look at those specific responses, although many times they're very consistent. You can see the degree of confidence that we have in each of those numbers. Whereas in finance, we had a much larger population, again, of the large companies. So as we look through this, what's interesting to note is that application risk classification, the activity of simply saying an application is high, medium, or low risk, based, for example, on the kind of data that it processes, that is the broadest activity that organizations perform. And you'll see that the finance world, this is done at 4.6 out of 5, meaning almost all finance companies classify almost all applications by risk. They do it remarkably consistently. And even energy utility, which was often behind many of the peers in other areas, does this rather consistently. Only, the software companies that we measured were lower than those two at 3.5 out of 5, perhaps because, they put more focus on some of the other controls. The next most common thing was threat risk assessments. And we called this out because oftentimes when we look at a company like a finance company or energy utility company, they do have a paper-based TRA process that's not focused on application security, but has coverage of application security. And so many times people think of this as an activity that handles security up front. But realistically, it usually has very light coverage of something like application security and focuses more on understanding the data types, the data security, backup and disaster recovery, et cetera. So usually they're quite expensive and they differ by the person running the assessment. After that, there's a huge drop, okay? And really then on average, what we're starting to see is many activities that people are doing specifically on the highest risk applications. So perhaps no surprise to us, but interesting to see, is the 3 most common activities beyond risk classification and risk assessments are static analysis, dynamic analysis, and penetration testing. Basically 3 forms of testing. Many companies believe that by doing 3 forms of testing, they have built security in. And we'll talk about some of the challenges with this afterwards. But certainly it is what has scaled for a lot of companies. In fact, even static analysis scaling higher than the other ones. It's been interesting to see the technology morph and increase over the years. After we look at the testing activities, as you go down, you'll see application security requirements and secure coding standards and guidelines. So these are both what we'll call shift left activities, things that you do at the onset of a software development process. Now, they didn't score quite as high as the testing activities, but they were scaled fairly effectively. What's interesting to see, though, is that when we talk to companies that do this, there's a lot of companies that just don't do either of these things at all. And then there are companies that do it across all or nearly all applications, because once you get set up in a program of doing security requirements or doing standards and security coding standards and guidelines, it's relatively quick to be able to scale it. As long as you have something that people are actually using. So, those were interesting. The next thing that we saw was web application firewalls, which is a 2.6 out of 5. And again, something that was a little bit of a surprise to us, because we thought that web application firewalls were a little more widespread than they actually are. What we would often hear people say is that they're using web application firewalls on their most critical internet-facing applications. But not beyond that, because of the complexity and the potential production impact of running a web application firewall. After that, we started to get into some of the things that people have described as essential for secure SDLC, manual code reviews, threat modeling, right? So for years, we've talked about these things as an industry being, just absolutely critical to be part of your application security program. But our data suggests that they usually aren't being done at scale. For example, manual code reviews, if you are a software vendor, right, you may be doing quite a bit of manual code review. In fact, we see 3.5 out of 5. So it's done more than the high risk applications, because many software vendors, obviously this is critical to what they sell, but they're already doing code reviews in a non-security context anyway. So they'll add security to the process. Whereas, let's say, for example, a energy company or a finance company, usually doing it on a much smaller subset, like the most critical facing applications. Threat modeling and design review. Again, if you look at, say, a finance organization, typically the kind of industry that is ahead of the curve from a security perspective relative to non-software peers, they are looking at a 1.8 out of 5. So one of the least scalable activities for them is threat modeling. And looking at both of those two things combined, manual code review and threat modeling, the thing that we heard the most, loud and clear when we talked to our respondents, is that people would struggle with scaling these two activities. They do require expertise in application security to be able to be done effectively. And people simply just don't have enough of that expertise in-house. So interesting to sort of challenge our thinking on what is a scalable activity and what should be part of our standard secure SDLC toolbox across the organization. The next thing that we saw was open source library scanning, or component verification, as it's being called sometimes. 2.3 out of 5. And this one, though, what was interesting is not so much that people were expressing a challenge with open source library scanning, but rather that they were relatively new to evaluating it. And almost everybody you spoke to was evaluating it and did see this as a critical risk. And that's nearly across the board, across all industries. So we will expect to see this one rise quite rapidly over the years. I'm just going to take a second here to look at the question. Was secure code training one of the activities from Liam Doyle? Good question. It is one of the activities. However, we're not talking about it here because it's not across a series of applications, but on developers. So it's a different scale, right? Typically, when people are thinking about the adoption of security training, it's what percentage of our developer population rather than which applications have undergone the process. So I'll talk more about that afterwards. Oh, sorry, and I'll go back before I get to this. So the next ones that we saw were security testing performed by QA testers. This was a 2.1 out of 5. And what's interesting, again, is if you look at the ISV average, it was closer to 3, so 2.8 out of 5. What we understood the difference here to be is that in the ISV world, in the software vendor world, they're typically hiring very technical QA testers who have a development background and can do things like security testing. And so that's why you see broader adoption in that vertical. Whereas in many other verticals, the QA testers may be more functional testers, people who are doing step-by-step instructions. That's not true across the board, of course, but there are, for a lot of companies, that's what they look for. And so if that describes your testing population, then they may not have the background to perform many of the security tests. So interesting, because again, that's something that we have been sort of preaching in the industry for years as a critical function to do. Fuzz testing was the next one, 1.9 out of 5. And in fact, this is typically done on non-web applications. So you'd see it done for C++ applications, network protocols, these sorts of things. Not done regularly across the board because a lot of people are focusing most of their development on web applications or mobile applications, HTTP-based protocols, and they're not really applying fuzz testing. I like to point this one out because oftentimes we'll see this in a taxonomy of all the best practice activities you need to do, but really you want to think about whether or not it makes sense for you based on what kinds of applications are in your portfolio. So if on the other hand you are developing C++ applications and you're not performing some kind of fuzz testing, then that could be a pretty significant risk. So if what you're looking at is what is your vendor doing as opposed to you? What are your vendors who are building software for you doing? And those vendors, let's say, create desktop applications. You want to make sure that fuzz testing is one of the things that they're executing on. And then the last one, which is again a bit surprising to us, was real-time application security protection, RASP, or interactive application security testing, IAST. So this is an industry that's sort of been blooming for a few years now. There's a lot of market, I guess you could say, noise about the RASP or IAST, but we didn't see very large adoption of these technologies our customers. Now, for RASP, there was a significant amount of concern about the production impact, whereas for IAST, a lot of people were quite optimistic about IAST. So like open source library scanning, IAST is low probably because it's relatively new, because the industry awareness of it hasn't spread that much yet. But we expect in the next year, based on what we heard people were piloting last year, we expected next year this number to jump, and then in the next 2 to 3 years to jump quite significantly. So I want to hammer in a little bit on the point about number of vulnerabilities found. The fact that outside of risk classification and threat risk modeling, static analysis, dynamic analysis, and manual penetration testing are the 3 broadest activities that people perform. So this diagram helps to illustrate a sort of concept that we've seen, which is if you take an application, right, raw source code, or an executable, and you run it through static analysis and dynamic analysis. Let's say you took all the tools in the world and you put them together. What we have found is that, in fact, those tools can, in aggregate, find about 54% of the potential risks. Now, you might question that number, and we're actually going to produce a paper on this in the coming weeks to sort of go into a little more technical depth on this. But keep in mind things like data privacy, authentication issues, authorization issues, business logic issues, right? Some very basic security controls. Think about the times you've heard about an IoT device that has a hard-coded username and password. Would static analysis have found that issue? Potentially, right? But in many cases, it wouldn't, and neither would dynamic analysis. And yet it's a really major issue. Basic security control, or secure password reset feature, right? Again, a very basic security control that could be breached relatively easy. Authentication throttling, account lockout, right? I'm getting into a little bit of the technical nitty-gritty here, but there are a number of very specific security issues that a scanner just may not be capable of finding without a high degree of customization. And so, even if we then say, okay, well, let's focus on the ones that they do find, and let's ignore issues around false positive. Let's say it's all fine-tuned, right? Then we look at data from White Hat and Veracode, and this is specific to the financial services world, that says, roughly 46 to 54% of the things that it finds, the vulnerabilities that these scanners find, are remediated, okay? So just under half of them, of the 54% that are found, are not remediated, which is pretty interesting when you think about it, right? Now, what we don't have here is data to say, what is stratification of high risk versus medium risk versus low risk? And we would imagine that the remediation rate for high risk vulnerabilities is higher, right, than medium or low risk vulnerabilities. But I think anyone who's been in application security or really just information security long enough can think of many examples of times where there were high risk vulnerabilities that were just too expensive to fix, right, or it's just too late to fix. So there's certainly a population of those kinds of issues. And then, well, let's look at the population that is found and fixed. How long does it take to fix? And again, here, data from White Hat suggests that on average, it takes 316 days to fix a critical vulnerability. Now, again, perhaps the industry is moving to make this go faster with DevOps methodologies, but there's still a significant time lag. And so if you think about this picture in aggregate, we have 70% of issues that are being unaddressed by static analysis and dynamic analysis. Either they're not caught or they're not being remediated. And of that other 30% that are being found, there's a significant window of risk. So it's no wonder when we look at the financial services industry that application and web application security specifically is the leading cause of incidents, right? So very, very interesting data. I think a lot of times people haven't necessarily thought this way about their programs. We talked about manual penetration testing as well. And certainly manual penetration testing isn't necessarily limited to automation challenges, but often what we'll find with manual penetration testing is that they're time-boxed activities, right? So depending on how expansive that manual penetration test is, they may not have the time to go much beyond what the scanners find, and they might do a little bit of false positive, remediate or removal, or they will go beyond that, but because of time box window, they're only focused on a small slice of the application. So certainly you could increase the coverage by having a more expansive penetration test or a more expansive source code review. But in practice, this is not what we're seeing in industry. And so the white paper I mentioned is going to talk about some of the specific issues. So I'm not going to go into the details there. We will have a white paper that talks about many of the issues that scanners are not finding. Okay, so let's talk a little bit about the phases of the software development process, and again, think about the tools and processes that people are doing. So penetration testing is dynamic analysis. Really, you have to wait till code is done to be able to use them. So testing to release. What about code review and static analysis? Well, that's sort of at the development phase. And then you can think of requirements management kind of happening earlier than that, the requirements and design. And so these are really, they're not the only activities. As we talked about before, there's open source scanning, there's fuzz testing, there's building, having QA testers engage security, et cetera. But these are sort of like three building blocks that we're seeing people use to have a sort of holistic secure SDLC. And I want to tie 2 points that we talked about earlier. So if we think about the idea of identify, implement, validate, and we are only validating controls by doing testing, it's no surprise that we're using a number of vulnerabilities found as the metric to gauge our program, because it's the only thing that many companies are doing. And so you're only validating, you're not identifying controls, you're not implementing, you're only validating if you're just running activities to find vulnerabilities. And there's another sort of side effect to this. If what you're doing is biasing the success of your program on this count, number of vulnerabilities found, and the primary data driver for that is static analysis and dynamic analysis, then what you're effectively doing is biasing your whole program to what the scanners are good at finding and not at all to what the scanners cannot find, right? And that is a potentially huge risk to an organization. So it's important to understand that you're not just looking at vulnerabilities found, but you're thinking about identifying all the controls, implementing the controls, and then validating the controls. Now, another major area of focus for us was the third-party software. And it was interesting because we didn't go into the survey thinking about this, but very early on when we started to ask questions, we realized that there was a very big gap here. We asked people, how do you primarily build software? Well, of the respondents we spoke to, 47% primarily build in-house. Now, clearly that's not true of the general industry. Many companies only buy software and don't build in-house. But even amongst this population of people who participated in the survey, more than half either outsource software or they use commercial off-the-shelf software, they use some combination of the things. They do more of buying software than they do of building their own software. So then we asked the question, well, what are you doing to ensure the security of your third-party vendors? And so 92% of respondents had a vendor security questionnaire, not specific to application security, but a series of questions that they would ask on IT security controls. And usually these questionnaires are very light on application security. And what was interesting is that when we asked about the delta between this and what they talk, when they ask software vendors, is there any difference in how you treat software vendors? Most companies said, no, we have a standard vendor security questionnaire. We don't go into depth about application security with our software vendors. Now, the other controls that people relied on are, for example, review of security certification, like a SSAE 16, SOC 2, or an ISO 27001 audit. So like a general information security audit that, again, has sort of light coverage of application security. Only 46% even require the vendors to have a secure SDLC policy in place. 38% do some kind of testing or code review on their vendors, and much fewer do any kind of like threat modeling, design, or requirement level review or controls with their vendors. And kind of take away from this, and we'll talk about a little bit afterwards, is that if you're going to rely on vendor security questionnaires or security certification, you should be looking at a broader framework, or sorry, you should be looking at a deeper framework for application security than something like ISO 27001. So for example, the ISO 27734, which is still a standard in draft, but has many parts of it completed. And in fact, several large software vendors like Microsoft have certified themselves to be compliant with ISO 27734. That's the kind of thing you should be asking your vendor for if they're producing software that houses critical data for you, right? Because it is the software that is the root cause of so many different kinds of breaches, right? For example, somebody clicks on a link in email and they can track malware. If just clicking on a link, then you have to ask the question, what is it that caused you to contract malware? And oftentimes it's insecure software on your desktop, on the browser plug, in the browser itself, or and a productivity application of some kind. So are you then asking the vendors who are producing the software, what are you doing to make it secure, make it more secure than it is today, right? And we really feel that this is a big gap in industry. And if you push the risk back to the vendors that are producing the software, they will be forced to be more rigorous on their approach and not just do static analysis and dynamic analysis as the answer to building security in. So one of the key takeaways, what you want to think about in terms of, some of the things that we talked about is think about software security requirements management. And instead of just testing, think about how you link requirements to testing. So threat modeling, whether it's done manually or automated, generating requirements. Oftentimes what we found with our vendors is, or we found with our clients rather, is that they're using ALM vendors to integrate their security into. So, the development teams may be using something like Jira, and that's really where they want to push the security controls. And then you want to make sure that your testing is correlated back to the requirements that were generated from your threat model, right? So you can think of this whole process as software security requirements management. And regardless of whether you use software security requirements management or not, the bottom line is that you need to develop secure applications, not just in-house, but third party, so that you don't have to field all the risk that comes downstream from those insecure applications. So really 3 key takeaways from this. The first and perhaps most important one is to adopt the correct metrics to drive your program. I've pointed many people to this book, How to Measure Anything in Cybersecurity Risk. It is a sort of an actuarial quantitative view on how to measure risk in cybersecurity, not just specific to application security, but across the board. And it really takes away a lot of the, I'll say, qualitative conversation around understanding risk and puts it in terms that everybody can understand. Regardless of whether you use that or not, though, you want to make sure the metrics are correct. And if you're only using the number of vulnerabilities found, then you're biasing the program to only fix those vulnerabilities that are found by your scanners, if that's the primary source of data. Again, we have a larger treatment of this inside the report, and I would strongly encourage people to look at that. I'd also add that this is sort of some of the key takeaways. One of the areas we didn't talk about in this particular presentation was training, and I know that was brought up as one of the questions, but training is a key area. And in fact, one thing that we heard from many of our clients is that if you don't do training ahead of time, then what you'll find is that you get resistance to secure SDLC initiatives, any other secure SDLC initiative, because people aren't sure why they're being forced to do this new thing for security. So that was a really important sort of takeaway. The next thing is, again, stop tracking your program by number of vulnerabilities using scanners alone. So there are different ways to do this. You can use a security software security requirements management platform like SD Elements or the OWASP knowledge framework, or another alternative is to use tool-assisted threat modeling. Like for example, Microsoft has a free threat modeling tool. So you guys, you sort of have to choose the best way to do this. And in fact, if you have a small application portfolio, you may get away without doing any tool support at all. But the key thing to get out of is that you really want to have traceable requirements coupled with test cases so you can understand what it is that you need to implement, and then you can understand whether or not they've been tested. And I should point out that this doesn't obviate the need to do adversarial testing like traditional penetration testing, which looks beyond like a checklist of requirements and goes into what is a creative way to break into the application. You certainly need to do that still, but it shouldn't be the only way that you're building security in. And finally, require your vendors to have a higher standard for secure SDLC. So get them to adopt something like the ISO 27734 or the vendor BSIM or Microsoft SDL. Just don't be satisfied with a very broad framework like the ISO 27701, where many times people can sort of dance around the secure development aspect of that standard because it just doesn't go into depth. Okay, and so before I'll open up to questions in a minute here, but if you want to see the actual report, please follow the link to securitycompass.com/managing application security 2017, or you can go ahead and email us, and we'd be happy to help you there. We are going to be expanding this report and getting into a lot more depth for next year. The collection period for next year's survey is going to start shortly. So if you're interested in being part of next year's survey, please go to securitycompass.com/2018 and register your intent there, and we'll reach out to you as soon as we start that process. Okay, so that's the end of the presentation. So I'll open it up to any other questions people have at this point. Any takers? We'll give it a minute so that people can type in their questions. Do you have any studies that deal with the subject of ROI regarding secure code training investment? We don't have a study like what you saw here, but we do have some data around the return on security training for developers. So perhaps if you want, and I think that's Liam, if you want to just send myself a note, it's Rohit, ROHIT at securitycompass.com. We can track that for you, or you can send a note to info@securitycompass.com. It's not part of this study though, so we didn't look at ROI in this particular study. Yeah, no problem. Any other questions? Again, I'll give it a minute. Good presentation, Cecilia. Thank you. We'll leave it open for a couple minutes here. If you don't have any questions right now, but you may have questions later on, feel free to contact us. Like I said, info@securitycompass.com, or you can reach me, Rohit, ROHIT, at securitycompass.com. Okay, well, I think we'll close it here. Thanks for your time, everyone. And like I said, I hope that you found some value in this and you can participate for next